Yes, people, a very, very happy morning to all of you. Thank you so much. So, guys, we're doing this chapter called as Basic Accounting Terms. In the last class, we tried to cover a few terms. Let's do a very quick recap of that, and then we'll head forward to the new terms for today. So, in the last class, we tried to understand what is the meaning of entity or enterprise. According to you, what does an entity or enterprise mean? When do we use the term entity or enterprise? When you want to represent a business, we call it as entity. Fortune's Fun Learning Academy, what is it? Entity. It is called as business entity. Profit making entity. Got it, not got it. Kalpavriksha Academy, what is it? Entity. Reliance Industries Limited, entity. So entity or enterprise is a way of referring one business organization. Got it, not got it. Like how we refer you as human beings. Who are you? Human beings. In that also you have two categories, boys and girls. Boys category, girls category. Like that, how you represent, no? In the same manner, the business is represented in accounts like entity or enterprise. Who is responsible to carry out economic activity? What activity? Economic activity. So what does economic activity means? Anything which relates to earning of money, inflow, outflow of money. I'm taking classes for you. In return, I'm charging money from you. What is this? Economic activity. What is it called as economic activity? If I sell laptop to you, in return, I collect money from you. What is it? Economic activity. Okay, not okay. So this term you'll come across in many questions. Entity started business with so much of money. So entity means what? Business only. Got it, not got it. Okay. So entity are of multiple types. Business entity, government entity. Business entities again further of two types. If they earn profit, it is called as profit entity. If their motive is not to earn profit, it is called as non-profit entity. Non-profit entity means who? Trust, NGO. So they carry out the business activity. They make profit also, but that profit we don't call profit. Because profit means what? Which the owner enjoys. Which the owner enjoys whole and soul. That is called as profit. Here in the NGO, the profit that you earn is called as surplus. And that surplus is used for the benefit of the society. Got it, not got it. Hence, such kind of entity is called as non-profit entity. Non-profit entity. The next we studied what is books of accounts. Right? Accounts in olden days. Accounts in olden days. From here, let's say 30 years ago, 40 years ago, 50 years ago, 100 years ago. There was no computer. There was no system. So all the accounting was maintained manually in the books. Correct? So sales entries were recorded in sale book. Purchase entries were recorded in purchase book. Expenses were recorded in expense book. If I make payment to somebody, payment, separate book for that called as payment book, payment voucher. Then if I receive money from somebody, separate book called as receipt book. If I buy any asset in the business, separately recorded in the asset book. If I have any liabilities in the business, I record in separate book called as liability book. Got it, not got it. Now, all these terms I meant to explain in detail. All these terms are yet to be explained in detail. Some of them I'll detailedly discuss today. Got it, not got it. So in short, in the business, there are multiple transactions. So all the transactions are captured one by one, multiple books. And all of them put together called as books of accounts. Got it, not got it. The accounting that we don't do in one book. We do in multiple books. All the books put together is called as books of accounts. So accounts, books of accounts is a place where all the financial transaction of the business entities are recorded in a very organized manner. Got it, not got it. No. Then we discussed something called as transaction. What did we discuss last class? Transaction. 1 second. Tell me people, what is transaction? What is transaction? Transaction involves exchange or transfer. Exchange or transfer of what? Either goods or services or funds between two parties, not necessarily entity. One party is always entity, which is business. The opposite person can be entity, can be even human being. So you cannot say both the people are entity. In that one could be entity, other person, third party could be anybody. So for example, I am giving services to you. I am transferring my services to you. In return, what are you giving me? Money. So exchange. Got it? Now, in this, we are two parties. One party is entity. Who's it? Fortune's Fun Learning Academy. Other side, are you entity? If you are business, now you're entity. Are you business? No. You are individual person. You are human beings. So are you called as entity? No. You are not entity. You are not enterprise. So it is not necessary that the opposite party should be entity only. The opposite party can be anybody apart from entity also. Example, human being. Got it? Not got it? So what is a transaction? Exchange or transfer. Exchange or transfer. Exchange or transfer of what? Goods or service or funds between two party. In that one party is business entity. Other party is any third party who has got no relation to the business. So who is third party? Who has got no relation to the business. Can you give some examples of third party? The customers of the business are third party. Are the customers owner of the what do you call it? Entity business? No. So customers are third party. Okay. I buy goods from some supplier. Is supplier the third party? Yes. Is he the owner of the organization? No. Apana, he is third party. Okay. I take loan from bank. Whose bank? Third party. Got it? Not got it? Anybody who's got no relation with the organization is called as third party. Okay. Employee. I pay salary to employee. Is employee a third party? Yes. Because they are not the owner. Got it? Not got it? Okay. What is an event? What is an event? Hey, all this is discussed last class, man. I'm doing revision of last class. Result of transaction is called as event. Consequence of transaction is called as event. I give two examples for event. What is that? Very good. So in my business, I record income. Income recorded 10,000 rupees. Expenses recorded 8,000 rupees. So balance is how much? 2,000. Now 10,000 income, how did I earn? I took classes for you. You paid me the money. So it is a transaction between us. So this transaction got recorded. This transaction is recorded as transaction. This transaction is recorded as transaction. Got it? Not got it? Because it involved exchange of service and funds. Okay, va? Okay. Now I paid rent for this premises. I paid rent for this premises. Can I say that is also transaction? Because that is also exchange of service. The landlord gave the premises to me as service. In return, what did I give him? Rent, funds, money I gave. That is also exchange of service against funds. This is also a transaction. So both are recorded in form of transaction. Now the question is, the result of these two transactions is what? 2,000 rupees, which is profit. What is this 2,000 rupees? Profit. 10,000 money earned. How much spent? 8,000. Balance 2,000 is profit. This profit also we should record. This profit also we should record. But can I call this as a transaction? If you call this transaction apna, this 2,000 rupees, this transaction means with whom did you deal? One party entity, okay. Net profit, who gave me? Can you tell? Because nobody is coming and giving you net profit as such. But this is not a transaction. This is a event. This also is recorded. So there are two things recorded in business. One transaction, second is event. Transaction means what? Exchange of goods and service between two party, in which one is business and another is third party. But event is not a transaction between somebody. It is a result of all the transactions that you are recording. So for this profit also, separate journal entry we have to pass. For this profit also, separate journal entry we have to pass. Got it? Not got it? So journal entry we pass for either transaction or event. Some people say, sir, we pass journal entry only for transaction. False. Even for event we pass journal entry. Now what is journal entry? Don't know. Because I meant to explain. Got it? Not got it? Okay. Now that you've understood the meaning of transaction and event, in the last class, we discussed that there are two broad categories of transaction. One is called as cash transaction. Second is called as credit transaction. What is cash transaction? When you buy something on the spot, you pay the money. On the spot, you pay the money. That is called as cash transaction. Then what is credit transaction? I buy something, I purchase this mobile phone, but I'm not making immediate payment. I'm telling I'll pay later. That is called as credit transaction. Got it? Not got it? Online people, got it? Not got it? Not got it? Got it. Karthik says got it. Others? Okay, fantastic. This we discussed in depth in the last class. Do you want to go again in deep, or do you understood what it is? For revision, fine. No? Okay. So in cash transaction, there are multiple types of cash transaction. I took one example that if I sell the product, immediately receive the money. So from the seller's point of view, what transaction is? Cash sale transaction. Okay, va? Okay. From buyer point of view, buyer is purchasing the goods. Buyer is purchasing the goods on the spot, making the payment. So what type of cash transaction it is? Cash purchase transaction. Cash purchase transaction. Got it, not got it. Seller is selling the goods now, but money he will receive later. So what credit transaction it is? Credit sale transaction. Credit sale transaction. Buyer point of view. I'm buying the goods now. I'll pay later. So what type of credit transaction this is? Credit purchase transaction. Got it, not got it. Till this we discussed last class? Okay. Can we start the new terms for today? Okay. Now, very often you'll come across a term called as financial statement. What term? Financial statement. The ultimate purpose of preparing accounts is what? To find out two things. One is to ascertain financial performance. Second is to ascertain financial position. Simple, forget all that. Big heavy terms. Financial performance, financial position, forget all that. All of your businessmen. You want to prepare accounts. Why? Why do you want to prepare accounts? Simple, I want to know, I did hard work for last 1 year. At the end of 1 year, is my business profitable or not? I want to know, na boss. How will I know it? Based on data. Based on data. Which data? Accounting data. To get accounting data, first you have to record all the accounting transactions in the books of accounts. In the books of accounts. Got it, not got it. So you said, even without understanding what is accounts, you said, sir, I'm a businessman. I want to know the profit of my business. My objective is to know profit of the business. Anybody and everybody, what they want from business, first thing to know, what is my profit? So the first objective of preparing accounts is what? To know your profit, to ascertain your profit. Profit reflects the performance of the business. Imagine my academy. I'm telling my profit is 10 lakh rupees last year. Profit is 10 lakh rupees last year. Okay. Can you say it is good or bad? No. Now I'm doing comparison of current year. Current year I'm telling that my profit is 15 lakh rupees. Last year profit 10 lakh. Current year profit 15 lakh. So compared to last year, this time have I grown in my business or not? In my business, is there a growth or not? Yes. So this kind of analysis, from where do you get to know? From accounts. Got it, not got it. So the profit is a measure of performance of the business. Last year profit 10 lakh. This year profit 15 lakh. My profit is grown by 5 lakh rupees. So my performance is improved. So profit is nothing but reflection of the performance of the business. If business is performing well or not, what do you look at and tell? What do you look into and tell? That yes, your business is performing super. What do you look into? Profit. So the financial performance of the business is ascertained by preparing one document called as trading and profit and loss account. Trading and profit and loss account. Got it, not got it? Hell no. Okay. Sometime this document is, trading and profit and loss account, is also referred by name called as income statement. What statement? Income statement. This term is very rarely used. But at times they use this word also. 99% what term will be used to measure the financial performance? Trading and profit and loss account. Trading and profit and loss account. And we might get this as an MCQ, true and false, saying that income statement is also called as trading and profit and loss account. True or false? True. Got it, not got it? Okay. So the first purpose of preparing the accounts is to know the financial performance. Second purpose of preparing the accounts is to know the financial position. Position means what? On a particular date, how much money I have in hand. We did business for entire 1 year, no? At the end of the 1 year, I want to know in hand how much cash is there. Because cash will change every day. Yesterday in your pocket, how much rupee was there? Yesterday in your pocket, how much rupee was there? Zero, huh? Oh my God. So sad. Anybody who's got pocket money? Somebody? 10 rupees, 20 rupees, 50 rupees, 100 rupees. Something will be there, no? Nothing is there. Oh my God. All? I'll give pocket money. Okay, I'll give pocket money. Come on, man. Take pocket money. Come. Take pocket money. Now how much is there? 10 rupees I gave. So okay. So he's telling 10 rupee Pratik sir gave today. Will you maintain this 10 rupee tomorrow? First thing what he will do, no donkey fellow. He'll go out and have some chocolate. Tomorrow the 10 becomes 0. Which means what? Yesterday cash balance was something and today's cash balance will be something, which means every day you receive money, you pay money. So cash balance is never constant. So I want to know at the end of the financial year, at the end of the year, I want to know how much is there money in hand, how much money is there in bank. In the current year, entire year, you purchased 5 land. How many land? 5 land. You sold 2 land. How many land is remaining? 3 land is remaining. So on a particular date, I want to know how many land I have, how many buildings I have, how much money I'm supposed to collect from my customer, how much money should I pay to my supplier, which means on a particular date, I want to know position of each and every item. Position means what? Today, how much is my cash balance ka position? Today, how much is my bank balance ka position? Today, how much is the land ka value in my books of accounts? So on a particular date, I want to know the positions of asset, liability, and capital. You have no idea what is asset, what is liability, what is capital, because I'll be discussing that in the next class. So ultimately, you have to remember for now, you have to remember that financial statement comprises of 2 documents. How many documents? 2 documents. One is called as trading and profit and loss account. Second is called as balance sheet. These are the 2 documents. Trading and profit and loss account is prepared to know the financial performance of the business, whereas the balance sheet is prepared to find out the financial position of the business. Will you remember this? Okay. Today it might sound as if you're by hearting, but give me a couple of more days. In next few days, I'll prove it what this financial performance and what financial position means. No need to by heart. Today it seems like by hearting because you have no idea what is asset, what is liability, what is capital, what is income, what is expense. You have no idea because you've just started learning accounts. But eventually, once you understand all the 5 terminology, this becomes easy. But today I want to put in your head, what is financial statement? So this is nothing but the report card of the business. Oh my God. When I say report card, people go to their flashback memory. Report card, all red ink. No? So if you fail, what ink they use? Red only? Red only? Oh, you know, कितना है? French report card. Okay, what is that? All dash dash dash. Oh my God. So if you pass Aptina, they put green or blue? What ink they use? Black, blue or black, anything. But fail means red. Why they want to highlight that you failed? Oh my God. Like how you people have report card from your schools. Like how you people have report card from your school. Report card is what? Reflection of your performance. Performance in what? Exam and test. Like that, this financial statement also is report card of the business. It reflects the performance of the business. It reflects the position of the business. Got it? Not got it? So in exam, can we write and come? What is financial statement? Report card of business. Can we write and come? Get 0 marks. Nobody knows all this. This is for your ease of understanding. Got it? Not got it? It becomes easy when I use such languages, but you can't use the first term. Got it? Not got it? This line in exam, you cannot use it. This is only for your understanding. For reference purpose, I've used it. In short, what is financial statement? Report card of the business. Got it? Not got it? So now, next line you can write and come in exam. From here, you can write an exam and come. So what is a financial statement? It consists of set of documents that shows financial status of the business at a specific point in time. So for 1 year, for the entire 1 year, what is my financial performance? Means what? What is my profit and loss? At a specific point of time, means at the end of the year, what is my financial position? Means what? How much assets I have, how much liabilities I owe, how much capital I have invested in the business. Got it? Not got it? So as of now, keep this very simple, people. As we proceed forward, we'll understand this a little bit more in deep. Got it? Not got it? So if I ask you, what is a financial statement? What will you say? So a financial statement comprises of 2 documents. First document is named as trading and profit and loss account. Second document is called as balance sheet. Second document is called as balance sheet. Trading and profit and loss account is also called as income statement. And balance sheet is called as position statement. Position statement. Income statement and position statement, both terminology is very rarely used, but used. Okay, not okay? Okay. Trading and profit and loss account is prepared to evaluate the financial position, true or false? Trading and profit and loss account is prepared to evaluate the financial position, true or false? False. Then what is it for? To evaluate financial performance. Upon to know the financial position, what document I need? Balance sheet. Got it, not got it. Okay. Next term, accounting period. What period? Accounting period. Now tell me something. If you start business, will you close the business after a few days, few months? Or you would want to continue as long as possible? How much ever I can for 10 years, 50 years, 100 years. We want the business to get carry forwarded. So I also started this academy called as Fortune's Fun Learning Academy or Kalpabriksha Academy with the intention to do this business as long as possible. Okay. So right from day of starting the business till I close the business after 50 years, I will not do accounts. Is that okay? I will not do accounts. Is that okay? Means I will do accounts, but I'll not report it anywhere. Is that okay? I will prepare accounts. Continuously I'll prepare. But I will not report it anywhere. Is that okay? No, it's not okay. Imagine I started this academy in 2019. Not imagine. I started only. 2019 I started academy. How many years has gone by? Gone by how much? 19, 20. So 20 gone, 21, 22, 23, 24, 25, 26. March 26 gone. 7 years. I've done accounts on daily basis. But each year, how much is my profit? I've not calculated. Means what? I did not stop anywhere. So my accounts is continuously going for 7 years. So my 7 years ka total turnover is 70 lakh rupees. I'm telling you people, my 7 years ka total is 70 lakh rupees. Are you able to analyze anything in this? Are you able to analyze anything? Oh, what is? For you to analyze, you need to have a comparative data. Comparison comes when? When I compare my first year ka turnover with second year ka turnover. First year ka turnover 10 lakhs. Second year ka turnover 12 lakh rupees. Or let's say he's selling 15 lakh. 15 lakh we take. Apana first year turnover 10 lakh. Second year 15 lakh. So turnover is increased by 5 lakh rupees. This you got to know only when you broke the 7 years into 7 parts. Got it, not got it. So here we have to break accounting into multiple parts called as accounting period. So I have been doing business for 7 years. So I need to break down the accounts into how many parts? 7 parts. Each part is 1 year. So why am I breaking the accounting into 7 parts? Because I want to know in the first year what is my turnover. I want to know in the first year what is my expenditure. I want to know in the first year what is my profit. So that if I'm into profitability, if I'm making profit in the first year, means I'm going on a good track. I'm going on a correct track. Imagine my first year, it is a loss, which means what is the reason for loss? 2 reasons. 1, I've not earned sufficient income. Income earned is less. So I should focus more on earning income. Or second probability, I've done lot of expenditure. So to come into profit, I have to reduce my expenditure. This analysis, you got to know how? By looking into accounting data. So every year accounting data you look into, you'll get some information, some data based on which you can make the decision for the upcoming years. Got it, not got it. So as a owner, if I want to know what is the performance of each year, the 7 years ka accounting data I have to break into 7 parts. Each part consisting of 12 months. Got it, not got it. This is called as accounting period. One reason of why we have accounting period. As an owner, I want to know my performance every year. So I need to break my 7 year accounts into how many parts? 7 parts. This is owner's requirement. Apart from that, even the income tax department wants you to prepare accounts on every year basis. Why? Because they want tax. Why does government want taxes from you? To run this country. From your money only, the government is running the country. Think about it, no? When you go on highway, national highway, who's building the national highway? Who's building the roads? National Highway Authority of India. NHAI is building it. Who's NHAI? Not entity. Is it my personal entity, Pratik sir's entity? No, this is government entity. To lay the road, we need a lot of materials. You need manpower to work. Will those manpower people, staff, labor people work free of cost? No, we have to pay salary. We means who will pay? Government has to pay salary. So from where will government get money, boss? Tax. So is the tax only source of the government? Is tax the only source of income for the government? No. Government has got multiple sources. Government has got multiple source of income. In that, one biggest source of income is tax. Income tax, GST. Income tax, GST. These two are the biggest source of revenue for government. With this, what does government do? What does government do? Public infrastructure. They invest in public infrastructure such as national highway, bridge, railway. Who laid down railway? You laid down, I laid down. Railway track. Who? You or me? Government. Army, Navy, Defense. Correct? No. Every month we have to pay salary to them. Who's paying salary? You or me? Government is paying. From whose money? Our money. Got it, not got it. So about this, I'll discuss in depth when I do GST for you. Sir, do we have GST? Yes, it is there in your syllabus. Small level. For CBC people, it is there. State board, it is not there. But if you learn it, well and good. So in the GST topic, I will give you idea about what and all are the expenditure that the government does for you. Okay, now I'll come back. In short, to do all the public welfare from the government side, what does government need? Paisa, money. That money comes from where? Multiple sources. But what is the biggest sources for revenue for the government? Taxes. Got it, not got it. So government says that you will do business for 50 years. After 50 years, when you close the business, that time if you pay tax means what will I do with that money? I need to pay salary to the government officials or government offices every month, boss. So I need money at least a year. Minimum once in a year you pay me. Got it, not got it. So income tax department said that you have to fix one accounting period. For that period, you have to calculate the profit. On that profit, you calculate the tax and pay money to me. Got it, not got it. So whether you like it or don't like it, you have to break your accounts into accounting period. Small accounting period. Your business may run for 50 years. Break down into 50 parts. Each part is 1 year. Got it, not got it. Clear or not clear? Now, an accounting period is a 12-month time frame for which the business prepares the financial statement. What are they preparing? Financial statement. Financial statement means how many documents? 2 documents. First document is called as trading and profit and loss account. Second document, balance sheet. Got it, not got it? Okay. An accounting period is a 12-month time frame for which business prepares the financial statement, reporting its financial performance and position to the stakeholder. This financial statement, why are you preparing? So that we can report this, give it to the stakeholders or users of the financial statement. Users of the financial statement. Example I'll give you. Who are the users of financial statement? First user, owner. As owner, I need to know what is the performance of the business. Second, the income tax department wants to know what is the profit of the business. Because on that profit only, government will collect tax. So second user. Third user, rightly said, investor. In my academy, one third party investor has invested the money. So he wants to know how am I performing. If I'm performing well, he'll give more money. If I'm not performing well, he'll withdraw the money and go. So who's the third user? Investor, who's interested in my business. Fourth, employee, because he wants to see whether this company is growing or not. If this company is not growing, how will I grow as employee? So employee also have an eye on your financial statement. They have an eye on your trading and profit and loss account. Fifth one, lender, banker who gave the bank loan. He's worried every day, this person may earn profit or not. Because if you earn profit in your business, only then you can repay the loan to the banker. So banker in that way is interested in your business. Got it, not got it. Apart from that, 2 more people are there. So this topic when I discuss later about users exclusively, that time I will talk in depth. As of now, I give you a small example who are users. Understood? Because too much of theory if I take, it will be boring. So I'm just giving you small glimpse of things here and there. So are you able to understand who are the users? Who are the stakeholders? All these are also called as stakeholders. All these are also called as stakeholders. Got it, not got it? An accounting period is a 12-month time frame for which business prepares its financial statement and reports the same to the stakeholders and pays taxes on this basis. Got it, not got it? Okay. So you said accounting period should be 12-month time frame. Which 12 month? You didn't say no, sir. Should it be from Jan to December? Should it be Feb to Jan? Should it be March to April? What should it be? What it should be? Tell me, people. There's something called as calendar year. What is calendar year? There's something called as calendar year. What is calendar year? Jan to December is called as calendar year. Jan to December is called as calendar year. You guys know, no? What is calendar year? It starts with Jan, ends with December. When we celebrate New Year, we celebrate the New Year as per the calendar year. So as per the calendar year, what is the last date of the year? 31st December is the last date. 1st March is the beginning of next new year. Got it? Not got it? This is called as calendar year. So can we have the calendar year as the financial year? What is financial year? Financial year is that period for which you prepare accounts. So can we have the calendar year as the financial year? Can we have the calendar year, that is Jan to December, as the financial year? Yes or no? Starting from you. No. No. No idea. No. No. Or no idea. No idea. Okay. No idea. No idea. No, it's okay. No idea means what? Inky, pinky, ponky, father, something you can say no. Either yes or no. No. No or no idea. No, it cannot have. No idea. No. No idea. No. It can have. It can have. No idea. No idea. No idea. No idea. It can have. It can have. Very good. Online people, what do you see? Can I have Jan to December as my financial year? Can I have the calendar year as a financial year? Please tell.
No, sir.
Jayadashini says no. Okay. Prathik says no, sir. Okay. So all those who said, sir, we cannot have Jan to December as a financial year, you guys are terribly, terribly wrong. You can have Jan to December as a financial year. Nobody is going to stop you, because accounting rules does not say that the financial year is only April to March. So this is coming as a shock to us. Yes, it's true. You can have the financial year Jan to December. But in India, nobody will prepare the financial statement from Jan to December. Why? Because the income tax authorities wants us to report income starting from April, ending with March. Which means income tax department says that whatever income you earn right from April till March, whatever the profit you earn, on this profit, I want to collect tax from you. I want you to pay tax on that profit which you earned from April to March. Am I a fool that for my happiness, I will do accounting from Jan to December once? Then for satisfaction of income tax department, again I'll do April to March. Will I sit and do accounting two times? Am I that much jobless? So on safer side, what do we do? We will do what authority wants. Which authority? Income tax authority. What they want, we will do it. Got it? Not got it? 99.99% people, 99.9999999% people, they follow April to March as the financial year, because this exactly correlates to the requirement of the income tax department. When I do April to March as the accounting year, I don't have to prepare the accounting two times. One time over. So April to March, whatever accounting I do, with that I get to know the profit as per accounts also. I'll get to know the profit to be reported to income tax authorities also. Got it? Not got it? But in India, even today, there are some entities who follow the accounting year, the financial year, Jan to December. Why? Because they have their parent company. They have their companies outside the country, outside India. Have you come across this term called as multinational company? MNC. MNC. What is MNC? MNC is nothing but a company which is operating in more than one country. They're operating in several countries. Got it? Not got it? So like Apple. Apple has got its headquarters located where? Apple ka headquarters located where? How many of you use Apple phone? iPhone? 1, 2, 3. So you must be knowing. The headquarters of Apple iPhone is where? California. Okay. So basically California comes where? In which country? USA. In short, USA. It is there in USA. Got it? Not got it? Apart from this, Apple has got their multiple operations running in multiple countries. Multiple countries they are running. Got it? Not got it? So those are called as multinational companies whose operations are running, whose business operations are running more than one country. Those are called as multinational company. Multinational company. In multiple nations they are operating. Multinational company. April to March is a financial year accounting year in India. In USA, it is, example, let's say Jan to December. So that company will say, that company is called as parent company. That company is called as parent company. Parent company says that in USA, we are following Jan to December. In India also, the operation ka result I want as per Jan to December. So for reporting the accounting to the California, that is USA, they prepare accounts from Jan to December. And to report to income tax authorities, the same company in India is preparing accounts from April to March. Got it, not got it? Clear or not clear? So nobody is restricting you to do accounts only from Jan to December or April to March. You are given a free hand. You are given a free hand. But in India, everybody is using the financial year as April to March because it easily correlates with the requirement of the various other laws such as income tax law, companies law. Therefore, we follow the financial year as April to March. Clear or not clear? But when you do questions, sometime they'll tell you the financial year is only 1 year, Jan to December. So you will get questions both on financial year Jan to December and April to March. In your syllabus, the financial applicable is both Jan to December and April to March. In some question, they will say the financial year ending is 31st December. Got it, not got it? Upper starts when? 12 months ago. 31st December ka 12 months ago is what? 1st of Jan. Got it, not got it? But in general, what is accounting year? April to March. Accounting in general is done for the financial year, which starts from April, ends with March. Now, I want to know from all of you, why is it April to March? Apart from income tax reason, I said, income tax department wants April to March, hence we're doing April to March. Okay. Apart from that, is there any other reason why we are following the financial year April to March? Sorry? Indian calendar. Can you a little bit more elaborate about it? Why are you saying Indian calendar? Anything that you can give me a reason why the financial year is April to March? One reason is because of income tax department. But why did income tax department also say April to March, boss? They could have told Jan to December, no? Why April to March? Climate. कहाँ पे स्नो ज्यादा गिरेगा? कब?
In Jan, if it's too snowy, people won't be able to go to office and prepare at home. So
Work from home. Work from home. Okay. No, that's not the reason. Unfortunately. But good try. I appreciate. He's thinking something out of the box. Okay, others. India at one point of time, they said agriculture is the backbone of India. Even though it is true even now, but we have come far ahead of agriculture. So agriculture is not just the backbone. Today, technology also is the backbone of India. Multiple things. But back then, 50, 60 years ago, people used to say the backbone of our country is agriculture. It means if agriculture is not strong, India cannot economically grow. Right? Generally, this has got something to do with agriculture. Since India was predominantly into agriculture, so what used to happen is that generally this month of March, April, May is there, no? Is a period where you sow the seed, right? You sow the seed. Eventually, some crops are harvested in the month of October, November, December, and some crops are harvested in the month of Jan and Feb. We celebrate Pongal. Which month do we celebrate Pongal? Jan. Mid of Jan, we celebrate Pongal. What is the significance of celebrating Pongal or Makar Sankranti? It is a way to thank God for having a successful harvest. Means harvest is over. After we have a good harvest, we thank God, for giving us a very good harvest. Got it, not got it? So when is the harvesting done? Typically, by mid of Jan, the harvesting is over. Once you see good harvest, you pray God, you celebrate that occasion. And once the crops are harvested, what do? You have to sell those crops. So after the crops are harvested in December and first week of Jan, those are sold. So for selling the crops and recovering the money, it becomes 31st of March. So since we had this pattern, a pattern where in the month of April, May, June, we used to sow the seeds, take care of the crop, agriculture facility. Then somewhere in the month of July, August, September, October, November, December, depending on different crop, we used to harvest them. And the final harvesting was done in the month of Jan. Then that product is sold in the market. And by the time of March, the business is been done. Goods are all sold. Whatever money is required, it is received. Some will be pending, but most of the money they will receive. So that season typically gets over by March. So They wanted to align this. They wanted to align this financial system with agriculture system. Got it, not got it. Because back in those days, our main primary business was what? Agriculture. People used to come from what background? Agriculture background. So we had that concept in the past. And that concept was created not by India, it was created by Britishers. Britishers in the past, they were using us as a tool to do a lot of agriculture related activities. From here, they used to take all the crops, harvested crops to their country. Got it, not got it. So typically, this cycle was the best suitable cycle to know the performance of one financial year. So they said that let's have April to March as the financial year. Got it, not got it. Clear or not clear? These are the few reasons why we have the financial year April to March. If this is understood, I would like to go to the next point. Is this understood? Okay. Now, so a financial year is typically of how many months? 12 months. It starts with April. It starts with 1st April. 1st April ends with 31st March. So please understand, this April is falling in a different calendar year. So let's suppose this is the calendar year 2026 and this is the calendar year 2027. Guys, do you understand what is calendar year? A calendar year is where you start with Jan, end with December. Start with Jan, end with December. Now, the 1st April is the starting month of the financial year, which is falling in which calendar year? 26. It's falling in the calendar year 26. Whereas the financial year ka end date is what? End date is what? 31st March. This is falling in which calendar year? 27. So if your financial year is April to March, we typically refer this as financial year 26, 27. So when I say financial year is 26, 27, what does it mean? Then the accounting year starts with 1 April 26, ends with 31st March 27. Got it, not got it? So when your financial year is coming from 2 calendar years, this is how you represent it. Got it, not got it? So 26, 27 becomes the financial year. Financial year is also called as accounting year. Financial year is also called as accounting year. Okay, not okay. Can you please tell me, at present we are into which financial year? At present we are into which financial year? 26, 27. Because 1 April 26, the financial year is started. Your academic year is started and it will end by 31st March 27. So we are into which financial year? 26, 27. Got it, not got it. However, if any entity is doing the accounting from Jan to December, he does accounting Jan to December. So his financial year is what year? Let's say we are doing in 2026 means 2026 is your calendar year and this itself becomes your financial year. This itself becomes your accounting year. Got it, not got it? Because Jan is a part of which calendar year? 26. December is part of which calendar year? 26. So starting date, ending date, both are having one single calendar year. So we call this financial year as just 26. Just 26. Got it, not got it? But however, if the starting date of a financial year is belonging to some other calendar year and the ending date is belonging to some other calendar year, then both the year ka end date, end period is taken as financial year, which is what here in this question, 26, 27. Got it, not got it? You will get one question which says that this entity closes the books of accounts at 31st March 27. Closes the book on 31st March 27. Close the books of accounts on 31st March 27. So can you please tell me, this entity is following what year as a financial year? Think and respond. The financial year closed 31st March 27. So which financial year? 26, 27. Correctly said. So 1 April 26, we started business, accounting. And 31st March 27, we stopped accounting. Got it, not got it? Okay. Close the books of accounts 31st March 23. Tell me which financial year this is. 22, 23. Got it, not got it? Okay. Closes the books of accounts on 31st December 22. 31st December 22. Now tell me financial year 22, 23 or 21, 22? I gave only 2 options. 21, 22 or 22, 23? Are you sure? People are confident. Sir, I'll tell our answer, sir. It is just 2022. Got it, not got it. Will you make many mistakes in this now? Every question that you do, literally every question will have this data. And if you're not able to figure out what is a financial year, you are not screwed. You are royally screwed. How much royally? In next few classes, you'll understand. Now, if this is clear, can I move forward? So the current financial year starts from 1 April 26, ends with 31st March 27. Okay? Okay. Now, whenever we come across multiple questions, in that, you will come across one term called as goods. Now, what is meant by goods in accounting is what we are going to study. Goods in the normal language, we know what is goods. Anything that we buy to sell, anything that we buy to consume, anything that we can physically touch is goods. But that is in our day-to-day life. That is not the meaning of goods when it comes to accounting. So accounting is given its own meaning of goods. That is what we are going to learn. Are you ready? Now, what is goods? Goods are physical item or product which the business buy. Buy also is called as purchase with the intention to sell to its customer. Got it? Not got it? I am into business of buying and selling mobile phone. I am into business of buying and selling mobile phone. So if I buy a mobile phone, if I buy this mobile phone is called as goods. What is it called as? Goods. Any problem? Any problem? No. Okay. I'm in the business of providing coaching. I'm providing coaching only, no? Yes or no? Tell no. Yes. I'm buying mobile phone. I'm buying mobile phone to use it for my business. Using this mobile phone, I'll talk to my students. I'll do counseling to them. I'll do doubt clarification. I'll handle inquiries using for the business. Can I call this as goods? Can I call this as goods? He's saying yes. First you said yes. No. Because I'm not going to sell it. I'm going to use it. So if my intention is to use it, then it is not goods. Got it, not got it. So goods is nothing but something which you can physically touch. A physical item. A product which the business is buying. Business is buying. But with the intention to sell to its customer. That is called as goods. Got it, not got it. Okay. Okay, wow. Okay. I'm into business of manufacturing, let's say, this mobile phone. Manufacturing this mobile phone. To manufacture this mobile phone, you know what is manufacturing? No, I will explain in some time. I'm manufacturing mobile phone. To manufacture this mobile phone, what do I need, people? So first I need screen, sir. This screen is called as Gorilla screen. Huh? What they say, no? Name of the screen, Gorilla screen. In which angle Gorilla, I don't know, but Gorilla screen. Means what Gorilla power it is. If you punch this up there, nothing will happen. You put down, nothing will happen. Like that, they will tell and sell also. You don't try this at home. If you put it, it will break only. Yeah, hit with nail and all. Don't try. Now, I need to buy screen. Screen. Okay, wow, okay. Then what else do I need? For manufacturing this mobile phone, what do I need? I need chip, motherboard. Motherboard is required. Okay. What else? So speakers, a small speaker we put in, no? Speaker is required. Then battery is required, sir. Battery is required. Okay. Camera, yes, camera is required. Bas, ho gaya, bas. This much I wanted. All of that. Now, the camera what I purchased, the battery what I purchased, the screen what I purchased. Can I call that as goods? Can I call that as goods? Yes. Goods are things that the business deal with or either buy or manufacture and later sold to earn money. In other words, even to manufacture product, the raw materials that I buy, even that is called as goods. The intention to buy the raw material, the intention to purchase raw material is not to sell. The intention is to use for manufacturing purpose. Intention is to use for manufacturing purpose. Then these items, what we discussed now is called as goods. Got it, not got it? Hell no. Clear or not clear? Okay. Which means if I'm into business of buying and selling, I'm buying, selling. Who am I? Trader. Who am I? Trader. Who's a trader? Who buys and sells the goods. Buys for 100 rupees, sells for 120 rupees. So for selling, he's making a profit of 20 rupees per product. Okay, wow. If I buy and sell the product can I call it as goods? Yes. Can I call that product as goods? Yes. I'm manufacturing this mobile phone. I'm purchasing raw material. Those raw materials, can I call it as goods? Yes. In my coaching business, I'm purchasing stationery. 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 I'm purchasing. Can I call this as goods? Leave accounts. In day-to-day life, we'll say goods. Ah, sir, goods only. But in accounts, can you call this as goods? No, because intention is not to sell. The intention is not to use this for manufacturing. The intention is to consume in the business. Hence, these are not called as goods. Got it, not got it. Hell no. Okay. Next is raw material. Raw material. Sir, what is raw material? So raw material is physical item. Physical item means goods which are used in manufacturing the goods and products. Which are used in manufacturing goods and products. Simple example. To manufacture this mobile phone, you said I have to buy screen, I have to buy chip, I have to buy battery, I have to buy camera, I have to buy speaker, motherboard. All these are called as what? All these are called as raw materials. These are the ingredients to make this mobile phone. Hence called as raw material. Raw material. Got it? Not got it? Okay. Let me take another example. How many of you like to eat cake? Cake. How many of you like to eat cake? Love to eat cake? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Others? No. What a waste of life, man. What a waste of life. Every month, if you don't eat cake, at least one cake, then what is the point of living life? So do you eat? Of course. Okay, how many of you like to bake the cake? Or how many of you have done the baking of cake? Cake baking, you've done it. That's all, only few people. So what did you do in COVID period? When people, rest of the world, was sitting and making cake every day, Dalgona coffee. Like that coffee is existing. I got to know only in COVID. We'll put that coffee in that glass, little bit of water, half an hour to keep on stirring it. In that coffee, this ittundu coffee, dammatundu coffee pathini ivlo perisadum. Adu per enna dalgona coffee amma. I didn't even know such coffee is existing until then. So in COVID period, people were putting, I'm making this today, Instagram reels they used to upload. Yes or no? Yeah. Looking at that reels, even I got tempted. Okay, I'll also make something for my wife. So I started baking cake. Wife, keda pannalla bro. You'll not understand. Once you get married in future, that time you'll understand what is the pressure we have. So now, I want to bake a cake, but I didn't know what ingredients to use. So can you please name a few ingredients to make the cake? It's not flour. It's not flour. Flour. It's wheat flour. You have to be very specific. I used to say flour. My students corrected me like anything. So it's not flour, sir. It's flour. Wheat flour. Okay. Then what else is required? Sugar. Okay, done. Vegetarian cake. Pure veg cake. Now, cocoa powder. I don't like cocoa powder. See. Next. Milk. I said I'll put milk. People like said not milk. Condensed milk. எப்படி condensed milk ஆமா. ஒன்னும் இல்லைங்க. Amul, what is that? Milkmaid will come. No, which brand it is? Amul. Oh, Milkmaid is brand itself is Milkmaid. That Milkmaid இருக்குல்ல அதான் condensed milk ஆமா. சாப்பிட்றதுக்கு மில்கி பார் மாதிரி இருக்கும் அப்படியே சூப்பரா இருக்கும். That you have to add condensed milk. What else? Essence. In that period, I got to identify one more term called as zest. Zest. ஒன்னும் இல்லைங்க, இந்த சாத்துக்குடி இருக்கு இல்லையா, சாத்துக்குடி அடிச்சு நீ கிரஷ் பண்ணி அது பவுடரா வரும், அதுக்கு பேர் zest அம்மா. I didn't even know. Until then, I knew zest is only two-wheeler. That time I got to know zest is also nothing but orange powder tool, which they add in the cake to get that orangey flavor. Oh my God. That is when I realized in life, apart from CA, so many things are there which we haven't explored. So, wheat flour, condensed milk, zest, sugar. Then what else do you add? Baking soda, baking powder, essence. Food color, I don't like it. Next. Hey, some people add curd also in this. I got it only last year. Last year, Eno also. That's baking soda is Eno only. Instead of baking soda, Eno or baking soda. Anything is fine. I'm pro, you ask me, I'll tell you. Some people add curd also. Last year, I got to know. How many of you add curd in your cake? You add. So that is true that people add curd. I got to know last year only. So people add curd also in that. Okay, wow. Now all these items independently are called as what? In our day-to language, we call it as ingredients. But accounting people, we are different people. We don't use normal terminology. We will call it as raw material. What is what it is? Raw material. Okay, not okay. Now, all this raw material, we put and mix. It becomes what? Batter. I got to know something called as batter only in COVID period. I used to call that as dough. Dough and not dough soap. Chapati பண்றதுக்கு அது வரும் இல்லையா டவ் எடுத்து கல் மாதிரி எடுத்து மண்டல் அடிக்கலாம் பாத்தியா தட் இஸ் டவ் ஆமா if it is in solid form it is dough liquid form means batter I never knew that both are different until COVID I said both are same only no what is the difference you should see the look what my wife gave I felt what CA I did in my life so if it is liquid state it is called as batter if it is rock solid state means if you put on somebody's head that head will polymerizify that is called as dough got it not got it the batter stage of cake is called as semi-finished goods. What is it called as? Semi-finished goods. Also called as work in progress. Also called as work in progress. So that batter, you put in oven. It's not oven. I used to say oven. Then only I got it. That's called as oven. Oh my God. OVEN starts for oven. Anyways, that's the fact of the life. Nothing can be done. It's called as oven. Okay. Some people put in microwave. Correct? No? What do? They do baking process. What process? Baking process. At the end of the baking process, they get one fluffy, spongy item called as cake. That is called as finished goods. Oh. This entire process of accumulating raw material, putting the raw material into process, and finally manufacturing the product is called as manufacturing. What is it called as? Manufacturing. Got it, not got it. So what is manufacturing? Manufacturing is a process where you accumulate all the required raw material, you put the raw material through a process, and at the end of the process, a new product emerges. A new product will emerge which has got a distinct character, distinct purpose, a distinct utility, which is different from the utility of raw material. Got it, not got it. Cake, we can eat it. We'll love it. Baking soda, can you eat? Baking soda separate, baking powder separate, zest separate, condensed milk separate. What am I eating? Cake I'm eating. No, boss. So before the cake was manufactured, it was in form of raw material. Each raw material had its own utility, own purpose, own usage. But when all of them were put into one process, at the end of the process, a new product emerged which is distinct from the raw material product. The new product which is emerged is very distinct and unique from the initial raw material product. So this product is called as finished goods. Finished goods. Got it, not got it? Hell no. So what is raw material? It is the basic material or ingredient which is required to prepare the finished goods. To manufacture the finished goods. Got it, not got it? Now, if the goods are finished partly, that is called as semi-finished goods. Don't say partly finished goods. We don't have such terminology. We call it as either semi-finished goods. Semi means half finished goods or work in progress. Got it, not got it? If you can see one diagram here. In this diagram, in the first leg, what do you see? In the first diagram, what do you see? It is wood. Wood is the raw material required to manufacture the wooden chair. To manufacture wooden chair, what is my raw material? Primary raw material, wood. That is called as raw material. Is raw material goods? Yes. Because intention is to what? Use for manufacturing purpose. So can I call raw material as goods? Yes. So these goods raw materials are manufactured in form of chair. But here, what is pending? Polishing is pending. What is pending? Polishing is pending. Can I sell this in market just like this? No. So this is called as semi-finished goods, or a goods which is in work in progress stage. Got it? Not got it? Once if I complete the final step, which is painting, the final product, what is emerged, is called as finished goods. Finished goods. Okay, not okay. Online people. Okay, not okay. Tell no. Tell. Will not tell? Nobody's responding online. Aisha, Jayadarshini, Sajaya, Satya, Karthik, Pavan, Kushal. When you respond, unmute and respond. Okay, okay. I know the trick how to get the response from there. Now, finished goods are the products that have completed the manufacturing process. So what is finished goods? Finished goods is that product which is completed the manufacturing process, but are yet to be sold to the customer. Got it? Not got it? For bakery business, what is the raw material? Flour, sugar, baking soda, etc. Those are called as raw material. If this is all put together and formed a batter, that batter is called as semi-finished goods. And if the final product is emerged, that is called as either bread or cake. Bread or cake. That is called as finished goods. The final product is called as finished goods. For a furniture maker, what are the raw material? Wood, nail, glue, cushion. In case if you have a dining table at home with cushion, that cushion is also what? Raw material, no? Because all of them put together is giving a new product called as chair. Cushion chair. So all these are called as raw material. I have manufactured a chair, but on that cushion I have not put it. Cushion is not put it. That is called as semi-finished goods. Semi-finished goods. The moment I put cushion, I do complete polishing. That is called as either table or chair. Okay, not okay? Okay. For a mobile manufacturer, what is the raw material? Metal, the metal body, the frame in which you put all the chips, not that eating chips. You understand chip here, no? Plastic body, microchip, screen, battery, what you call camera, lens, etc., etc. All that is called as raw material. And the final product that you manufacture is called as mobile phone. Got it? Not got it? Tailoring shop. You go to tailoring shop, you want him to stitch a shirt for you. So the cloth that you give is raw material. The buttons that you give it to him, the threads that they use, all that is called as raw material. When all of them is put into one product, the final product that emerges as clothes, means either shirt or whatever dress you want to say. Got it? Not got it? So this is good enough to understand? Is this good enough to understand? Okay. So before I take the term trading goods, I want to discuss who is a trader and who is a manufacturer. Who is a trader? Who is a trader? Often you'll come across a question which says that a trader started a business with so much of cash and capital. Who is a trader? A trader is a business entity or a business enterprise that purchases the ready-made goods. He's buying the goods which is ready-made, ready to sell goods he buys with the intention to sell it without altering the nature of the product. Without altering the nature of the product. I'm into business of buying and selling mobile phone. I'm into business of buying and selling mobile phone. Who am I? Trader. Who am I? Trader. Because I'm buying this mobile phone from the Vivo company, from the Vivo manufacturer. I'm selling it as it is. Am I making any alteration in it? Am I removing the screen, putting something else? Am I selling this as a separate product? No. What I'm buying, that I'm only going to sell. So without altering the nature of the product, I'm going to sell as it is. So I'm into what business? Trading business. What business? Trading business. The person who does the trading business is called as trader. The person who does trading business is called as trader. I have one question. I'm running a provision store. I buy products, sell products. In provision store, multiple products are there. Now, I'm buying red chili powder in bulk. I'm buying red chili powder in bulk. Bulk means what? That one bag is 25 kilo bag. 25 kilo bag. So I cannot sell the 25 kilo bag to customer. No. Which donkey will accept 25 kilometer ka chili bag in one shot? Nobody will. People want 1 kilo bag, 2 kilo bag, like that. Yes or no? So I am purchasing in bulk 25 kilo, one bag is coming. Now that 25 kilo chili powder, I'm packing into 1 kg packet, I'm selling it. Am I a manufacturer or am I a trader? Manufacturer. Others. 25 kilo chili powder in one bag, I'm packing into small quantity of 1 kg each, I'm selling. Am I a manufacturer or a trader? Okay. Others. Majority people said manufacturer. Others. Who said trader? Trader. Any specific reason why it is trading? Okay. Very good. Clap hands for it. Loudly. This is not manufacturing. In manufacturing, you alter the essential characteristics of the product. Think about cake. When you put the raw material inside the process, did you call that raw material as cake? No. So you purchased raw material, you put them into baking process. At the end of the baking process, you got a distinct product which with individual identity. That is manufacturing. So here, am I changing the identity of the product? Am I changing the identity of the product? No. Am I altering the character of the product? No. Before making into small packet, chili powder was called chili powder only. After making small packet also, it is chili powder only. Am I altering the character? No. Before manufacturing cake, the raw material was called as baking soda, baking powder, some name you told. But at the end, when the product was manufactured as cake, did you sell that I'm selling baking soda? I'm selling baking powder? No, you give a new name to it called as cake. Apana, the character of the product is undergone a change. That is called as manufacturing. Got it, not got it. So when you buy something in bulk and make them into small packets and sell, still you are called as a trader only. You are not a manufacturer. You are not a manufacturer. Got it, not got it. Hell no. Who is a trader? Business enterprise that purchases a ready-made goods with intention to sell as it is, either in the same quantity or small quantity, without altering the nature of the product. He is called as a trader. He doesn't want to take the tension of manufacturing. He's like, I'll buy, I'll sell. I'll buy, I'll sell. I'll buy for 100 rupees. Keep a margin of 20 rupees. I will sell. I don't want any further headache. That person is called as trader. Who is a manufacturer? A business enterprise that procures a raw material, puts them into some process, and at the end of the process, a new product emerges, which has a complete different character, different purpose, different utility, different value altogether. That is called as manufacturing process. Who does the manufacturing? Manufacturer. Who does the manufacturing? Manufacturer. Who does the manufacturing? Manufacturer. Are we clear or not? Before you manufactured the cake, all the ingredients were called as, all the raw materials were referred by different name. Baking soda, baking powder, baking, what else, I don't know. That had a different character. After manufacturing, the cake had a different character. Before manufacturing, those ingredients had different purposes. After manufacturing, this cake had a different purpose. I'm using it for my birthday. Purida, can I cut baking soda, baking powder on my birthday and say this is cake? No, that's not the character of the product. So the final product has got different utility, different value altogether. Got it, not got it? Hell no. Now listen to very carefully. The manufacturer will deal with three types of goods. One is called as raw material. Second is called as semi-finished goods. And the last one is called as finished goods. Raw material is something that he buys with intention to put them into process so that he can manufacture some product. What is semi-finished goods? The raw material that is purchased, put into process, but the process is not completed. It is halfway through. So halfway through is called as semi-finished goods. And the final product that he manufactures is called as finished goods. What do we call it as? Finished goods. Now this finished goods, who will buy? Trader. Now trader will not call this as finished goods. He will call it as SIT, stock in trade. He will call this as traded goods. What will he call this as? Traded goods. He will not call it as finished goods. He will call it as traded goods. So what is finished goods? Finished goods is nothing but result of manufacturing. Got it, not got it? So whenever I say finished goods, what should strike your mind? This is the product manufactured by the manufacturer. But whenever I say traded goods, what does it mean? These are the finished goods purchased by the trader from the manufacturer. So I, as a trader, that I called as traded goods. I call that as traded goods. Example. All of you know cake B? All of you know cake B? Cake B. Okay. Any other famous bakery can you tell me? Very famous bakery where people bake cakes. Any other famous cake B is fine. Can I take this as example? Okay. So what is cake B into? Manufacturing cake. So the cake that they manufacture, cake B will call this as finished goods. Got it? Not got it? Now, this finished goods I am buying. Who am I? A small bakery. I'm buying the cake with intention to sell. The same finished goods for trader, it becomes traded goods. Same thing. But product is same. But for the manufacturer, we call it as finished goods. And for the trader, it is called as traded goods. Got it? Not got it? Hell no. No. At the end of the year, some of the traded goods, if it is not sold, if it is unsold up to now, we call this as stock in trade. Very often we'll come across this term in 11th and 12th both. That time I'll ask you the distinction between traded goods and finished goods. You should say exactly what is the difference. Got it? Not got it? I'm not teaching anything which is not important. Whatever I'm teaching, everything is important. All the key terms which is important, which we'll use in the upcoming classes, is what I'm going to discuss. Am I loud and clear? So trading goods or trade goods are what? Trading goods are ready-made goods. Ready-made goods purchased by the business intermediaries with the intention to sell as it is without altering the nature of the product. So such kind of goods are called as trading goods. Such kind of business is called as trading business. And such activity is done by trader. Got it? Not got it? Well, no. So far comfortable? Can I call raw material as goods? Okay. Can I call WIP as goods? Work in progress. And the chair without painting, can I call it as goods? Yes. Batter, can I call it as goods? Yes. FG, can I call it as goods? Yes. Traded goods, can I call it as goods? Yes. All these are goods, which I'm going to sell them in the future. So raw material alone, I'll not sell it. I'll use it for the manufacturing purpose. WIP is also converted to finished goods after manufacturing. And these two are to be sold. So what is goods? Goods are physical items and things which are either used in manufacturing or sold. Only these are called as goods. Any goods that I buy where I consume it, such as in my business, I'm purchasing A4 sheets. Why A4 sheets? When I keep test for you, I will take the printout of the question paper on A4 sheet. So that A4 sheet, can you physically touch? It's a physical item. Yes. Can I call it as goods? Normally you can call as goods, but in accounts you can't call it as goods because I'm going to consume that in my business. Got it? Not got it? Clear or not clear? Tell no. No. Can I continue further? Purchase. What is the meaning of purchase? So buying is purchase. Oh my God. According to you, anything that you buy in the business is purchase. My dear friends, if that is your thought process, you guys are terribly wrong. Everything that you buy in the business is not purchase. In general life, forget accounting. In normal life, what does purchase mean? Anything that you buy is purchase. Idala in normal life, not in accounts. In accounts, there is a specific meaning of purchase. Buying goods. You know what is the meaning of goods now? Yes. Buying goods with the intention to sell or resell. That alone is called as purchase. I am buying A4 sheet for my business. I am buying stationery for my business. In normal life, forget accounting, normal life, what will you say? Today I purchase stationery. But that is not the meaning in accounts. So stationery, what I purchased in my business, can I call that as purchase? No, because my intention is not to sell. My intention is to consume. Consume means what? Not eat. Consume means use it for the business. If I'm buying any goods with intention to consume them in my business, then it is called as expenditure. It is called as expenditure. So when do we call it as purchase? When I buy something with intention to sell or use in manufacturing, only those items are called as purchases. Got it? Not got it? So in business, what can you buy? Let's come back. In business, what do you buy, people? You will buy raw material. So can I say raw material is purchase? Yes, because I'm going to use it in the manufacturing. Raw material is called as purchase. Got it? Not got it? Okay. Can I buy WIP from the market? Is WIP a product available in the market? No, no, no. It is a result of your half manufacturing. So you cannot buy WIP from the market. It is a result of your half manufacturing. So WIP can never be purchased. FG, is it purchase? For manufacturer, FG is your product that you're manufacturing. You will not purchase. So FG is not your purchase. Got it? Not got it? For a trader, same FG becomes traded goods. He purchases from the manufacturer. So can I call traded goods as purchase? Yes. So out of the 4 goods, which 2 items are called as purchase? Raw material and traded goods. Hence, these both, when you buy, this will go to one account called as purchase account. Purchase account. Got it? Not got it? So in business, everything that you buy, will it go to purchase account? No, 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 no. Anything that you buy, which you are going to manufacture, example, raw material, or anything that you buy, which you're going to sell or resell in the future, which is traded goods, these 2 only will qualify for being called as purchase. Hence, this will go to purchase account. Which account? Purchase account. Sir, then I have a doubt, sir. In your business, you're buying stationery. Upon stationery, is it goods? No. Because goods are something which is physically touchable, where the intention is to sell. Stationery, I'm going to consume in my business. So it is not goods. Can I call this as purchase? Normally, you can say I purchase stationery. Just because you're saying that I purchased a stationery, will this go to purchase account? No. But this is expenditure, no, sir. Then what will I record this as? I will record this as stationery expenses. Which means if I buy any goods which I'm going to consume in my business, use in my business apart from manufacturing, then I will record them under respective separate head called as stationery expense or something I'll record. Got it? Not got it? Tell no. Okay, not okay. So stationery that I buy with intention to use it, can I put them in purchase account? No. It'll go to stationery expenditure account. Okay, wow. Okay. Next example. I have a shop. Which shop? Stationery shop. What am I doing? Buying stationery, selling stationery. Buying stationery item, selling stationery item. So the stationery that I purchase, can I put them into purchase account? Yes, because intention is to sell. Oh, which means anything that I buy in the business where I have the intention to sell or use it for the manufacturing purpose, only these both will be put in purchase account. Rest, all the other items that I purchase will go to other accounts. For example, stationery will go to stationery expense account. Got it? Not got it? So all those who are thinking that whatever we buy in business, everything is purchased, you are wrong. Is there clarity available now? Are you able to understand this clearly now? Tell no. What is purchase, people? Buying the goods with the intention to sell or resell or use it in the manufacturing process, that is called as purchase. So from whom can you purchase? From whom do you purchase? From supplier or vendor. I'm purchasing raw material from some shopkeeper. That shopkeeper will be called as supplier or vendor. You'll be use this term. We purchased so many goods from the supplier. Upon a supply, the person from whom I'm buying the product is called as supplier of the product. Vendor. Got it? Not got it? For example, who are these two people? Entity. This is one business entity, another business entity. Yes or no? So what are these two people doing? What are these two people doing? They have opened their arms. Why? Why? To get the goods. If you see one gentleman is bringing the goods towards the entity, means what? We are buying the goods. We are buying the goods. So this is called as purchase. But before calling this as purchase, you have to ask that these goods, am I buying with intention to sell? Am I buying these goods with intention to consume as a raw material? If yes, then this purchase. No, sir, this is stationary apnina. This is not purchase. Got it, not got it. So everything that comes in the business as goods is not your purchase. Got it, not got it. Okay. Purchase is of two types. One is called as cash purchase. Second is called as credit purchase. One gentleman in hand, if you see money is there. What does it mean? The moment he is taking goods from the supplier, he is making the payment on the spot. So he's purchasing the goods on the spot, making the payment. Hence it is called as cash purchase. Whereas the other gentleman, he has got no money in his hands, which means what? He wants to buy the product now, wants to make the payment later, which means he's purchasing these goods on credit. Hence it is called as credit purchase. Okay, not okay. So purchase can be of two types. One is cash purchase, second is credit purchase. Purchase can be made of either goods or raw material. Goods here means traded goods, because finished goods you can never buy. Finished goods you buy, that is called as traded goods. Got it, not got it? Because finished goods is a term that we use it for manufacturing business. Traded goods is a term that we use it for trading business. So here goods refers to us what? Traded goods. Got it, not got it? Sometime they will use the word FG also. From whose point of view? Trader's point of view, they'll use the trader purchased the FG. Understand what that is? Traded goods. Got it, not got it? And what else can you buy? What else can you buy? Raw material. Only two things you can buy: traded goods and raw material. Traded goods and raw material. These two you buy, you call it as purchase. This will go to which account? Purchase account. This will be accounted under purchase account. This will be accounted under purchase account. Okay, not okay? So far, comfortable? So far, comfortable? Okay. Next, purchase return. Purchase return. What is purchase return? The goods that I purchased. Who am I? Trader. What did I buy? Traded goods. The traded goods that I purchased, no, I didn't like the quality. I didn't like its quality. Or I asked something, but they gave me something. You asked Lenovo laptop, but they gave HP laptop. Is it as per my requirement? My specification? No. Apana, vaangna goods na weapana. The goods that I purchased, will I keep it? No. What will I do? Return. So any goods that you've purchased, and later if you return, that is called as purchase return transaction. What transaction? Purchase return transaction. Okay, not okay? But the goods bought means what? Buy, bought means purchase. The goods that were purchased earlier are returned to the supplier. So what is the reason for returning? Any reason it could be. Reason is damaged. Wonderful. Simple. How many times you order from Amazon, Flipkart, Myntra, Agio? 10 times you order. Indra, how many times you return? 9 times you return. See, people flashback memory. Yes or no? Why do you return? Why do you return? Sir, size not matching, sir. Size is not proper. Color in the image was different. In real, it is different. Or damage is there. Or what did you say? Wrong product. Wrong product. Yes, very good. Wrong product return. So reason for return could be anything, no boss. Can I give a list of reason? No. Can you buy hard? No. Reason could be anything. We don't have to buy the reason. What you have to understand is when we return the goods, that is called as purchase return. The goods that we purchased earlier, if you return it, that is called as purchase return. Any problem here? No problem. See here. The goods that we purchased earlier, we didn't like it. Hence, what did we do? We gave it back to the supplier. And look at the supplier. Supplier is taking the trolley and going outside the business. He's taking the goods and going outside the business. Hence, it is called as return outward. Return outward. Look at my creativity. When goods is coming inside, trolley is facing inside. When goods is going outside, trolley is facing outside. And nobody's appreciating sir for taking so much efforts. Even after telling, nobody's appreciating, no? This means clap hands. Clap. Donkey people. Appreciation means what? Clap. Appreciation means what? Clap. Next time I say, nobody's appreciating me. What are you supposed to do? Very good. Loudly, everybody. You guys will think, what, sir is selfish. He's asking for claps. This claps is not for me. This is for you. Because when you clap, no, entire body vibrates. Mind will vibrate. You can't sleep for next 15 minutes. So those who are sleeping in class, by wake of, by the clapping thing, people wake up. Next 15 minutes, they'll be in shower. What happened in class? Everybody is clapping. Oh, yo, sir said some new dialogue. I missed it. And the guilty feeling, that guilty feeling that he has missed something, he will not sleep for next 15 minutes. So every time you clap for me, that is a clap to wake the people who are sleeping in class. Got it, not got it. Who was sleeping now? Anybody? Yeah. No? No. Okay. Now, purchase return is also called as return outward. Now, people often get confused. What is return outward? What is return inward? People get confused. Very simple. Outward means what? Goods is going out. When does the goods go out? Upon returning. Which return? Purchase return. Got it, not got it. Return outward. The goods which I return, which goes outside the business, is called as return outward. Got it, not got it. Clear or not clear? No. Sale, also called as turnover. When the goods meant for sale or resale are actually sold to customer, I purchase his mobile phone. What is intention? What is intention? To sell. I sold it. I got 50,000 rupees. Or forget, I didn't get anything. I sold it. This is called as sale. I sold his mobile phone for 50,000. It's called as sale. Also called as turnover. Got it, not got it? Tell no. I have, let's suppose, 10 students. Each one paying me 20,000 fees. What is my turnover? 2 lakh rupees. Can I call this a sale? Am I selling something to you? No. So sale is a term that we use for goods business. But turnover is a term that we use for both goods or services. Got it, not got it? So turnover is a broad terminology in comparison to sales. So the goods which is meant for resale are actually sold to customer. That is called as either sale or turnover. Got it, not got it? So if I'm selling mobile phones, let's say I sold 20 mobile phone, each costing 50,000 rupees. What is my total sale value? Total sale value. Inga calculate panadukku vidinjirum mat. Till you calculate, it will become next day morning. 20,000 to 50,000 is how much? Sorry, 20 to 50,000 is how much? 10 lakh rupees. Yes or no? So this 10 lakh is called as sales. Also called as turnover. Any problem so far? This 2 lakh is called as just turnover because from 10 students, I've collected 20,000 rupees. Did I sell anything to you? No. Hence we call it as turnover. Got it, not got it? Now, sale is of two types. One is cash sale. Second is credit sale. Look at this gentleman. Who is he? Don't say West Indian person. It is entity. What is entity doing? Holding the goods. He's not delivery boy, boss. Looking at him, don't say it is delivery boy. He is entity who's selling the product. He's selling to two customer. One customer, see, give me paisa and get another person, gym body. He's like, take money. So when I give the product, goods, and immediately collect money, such kind of sale is called as cash sale. What sale? Cash sale. Goods sold, immediately money collected. That is called as cash sale. Whereas in the first transaction, goods are sold, but money is not paid by the customer. He doesn't have money in hand. In the second case, customer has got money in hand. In the first case, entity is selling the goods to customer on credit. Means what? I sold the goods now. Money, I will get it later. This gentleman will get the money later. Such kind of sale is called as credit sale. Got it, not got it? And the sale is always recorded in the sale account. Purchase return is accounted in which account? Purchase return account. Now, what is the meaning of account? I have not explained it. I've not explained it. I will explain in the upcoming classes. Purchase is recorded in purchase account. Purchase return is accounted in purchase return account. Sale is accounted in sale account. Got it? Not got it? Clear or not clear? Now, what do you think is sales return? What do you think sales return? The product that you sold to the customer did not like it. Reason can be anything. So customer is coming back and returning the goods to the business. So who is she? Customer. Customer is giving the goods back to the entity. So such kind of return is called as sales return. Sales return, which means what? This entity sold this product to the customer earlier. Now customer did not like it because of any reason. She's coming back and giving the product to you. It is called as sales return. The goods that have sold earlier, now it is returned. Hence it is called as sales return. Also called as return inward. What is it called as? Return inward. Now she came here to return the product. Now upon returning the product, is the goods coming inside the business or going out? Here when the goods is returned, the goods is coming inside the business or going out? Coming inside the business. Hence it is called as return inward. Return inward. Got it? Not got it? So sales return are also called as return inward. When goods sold to the customer are returned by the customer, it is called as sales return. Sales return is also called as return inward. Now this will be recorded in which account? Sales return account or return inward account. Got it? Not got it? Now what is the meaning of account? I have not yet explained. Clear or not clear? Online people, clear or not clear? Respond online people. Clear or not clear? Any difficulty in understanding these terms? Any difficulty? No. We have a lot of terminology to do. Expenses, meaning profit, meaning loss, meaning of liabilities, meaning of capital, meaning of trade payable, meaning of drawings, loan, asset, fixed asset, trade receivables, inventory, cash. Because if this terminology is not clear, you will not be able to do the practical questions. Means you can do without knowing this also you can do, but that will mostly be like as if you're by hearting something. But when you understand the meaning of this, then do the sums, no? You'll get a proper feeling of it, a proper emotion of it. Okay, this is what I'm accounting for. You'll get a proper emotion of it. Got it, not got it? So 2 more classes we'll spend on terminology. Then we'll start the rules of debit credit. The proper accounting will commence. Am I loud and clear? So this document, I'll upload in the applications. Please revise this before coming to next class, right? So guys, that's all from my side for this session. I will see you all in the next class. Until then, bye-bye. See you. Take care. Thank you so much.